Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel for the final live class of the day, Building a Stock Portfolio. I'm your host, Kevin Horner. Thanks for being here today, everybody. We are going to spend a little bit of time working through the recent activity in our example portfolio today. We had a couple of executions go off in the last week since we've last spoken. And of course, with the removal of a couple of example trades, it's time to dive right back in and see if we can find some next example opportunities to take advantage of. So that's what we're going to do today. As always, I'm joined by my friend here, Connie Hill, in the chat, fellow coach, CMT, fantastic coach, of course. Connie will get to comments and questions that I'm unable to. I try to keep an eye on what's going on in the chat as we work through our discussions here. So if you've got specific questions, please do not hesitate to post those in there. Connie or I will get to them throughout the course of our discussion today. Of course, before we get to the part of our discussion today where we work through examples on the example portfolio and example trades going forward, we will start with a very brief market review. At the close, we'll look at the S&P, we'll look at the NASDAQ 100 and the Russell 2000, and then we'll dive into the last week or so. But before we do that, I do need to get to disclosure. So let me hit those. Please remember that everything we discuss today should be considered informational and educational only. We do not make recommendations nor any endorsement for a specific approach to trading here. What we do offer up are concepts and strategies of technical analysis traders may choose to employ, and the extent to which you choose to do that is entirely your discretion, of course. Additionally, in this class, we talk an awful lot about trade management. Once more, these are merely ideas and concepts. The specifics behind them are not recommendations. My encouragement is to maybe use the framework of our class and customize it to your comfort for both risk and tolerance for losses in the market. Admittedly, trading is about taking losses, limiting those to small amounts, and keeping our winning trades for as long as possible. And in this class, we pretty much do that with simply equities as opposed to option positions. So keep that in mind as well. And then last note, while we don't necessarily incorporate options in our class here, if you are using trades of options as examples, bear in mind when you work in the paper money that you will not have necessarily consistency of execution with paper money trades versus live money trades. There's a bit of differences in the way those play out. Most notably, you'll never be assigned on a short option early in a paper money transaction, but that can happen in any time in the real world. So you do need to be aware of those differences. Okay, so like I said, we're going to start off, everybody, with a look at the S&P 500. Here we are. We basically closed right on the 20-day moving average. Let's zoom in. You can see it. Yesterday, we closed below it or pretty much on it. Today, we had a bit of a doji. I don't know about all of you, but I imagine many traders are waiting to see and hear from NVIDIA this week prior to moving the market dramatically. I think there's just a lot of hand sitting, so to speak, here this week, kind of waiting on that. And that's why we've been kind of quiet and there's not been a whole lot of big moves. But yes, today's action held the 20-day above yesterday, the low perhaps in our pullback, and everything looks like standard support for the short run. Could some short-term weakness lead to a weak open or a test even of the 50-day moving average? We have to at least be prepared for something like that. The next layer of horizontal support down here is around 72.50 or so, with lows that we achieved in June. And you know what? Even a pullback to that would not feel great, never does, but we have to at least be thinking that if we got weakness, this is an area we could test. And then, of course, you've got the 200-day moving average all the way down here at 7,100, about 575 points away from where we are. And if you just want to see a percentage basis on a move like that, it'd be about an 8% drawdown from where we are today, or about 10% off of the highs, 9%, if you will. All right. So that's where we are in the S&P. The NASDAQ 100 brought you some green today as well, but a little different, right? We've got the confluence above us, the 20 and the 50 day, trying to send the 20 above the 50 here. But the action of the last, say, 7 sessions, week and a half, has been pretty rough for us in the NASDAQ 100 as oil had bounced. Well, today we got a pullback in oil, and that led to a little bit of bounce here for equities and tech broadly. And many of you who've been watching the Trader Talk sessions, of course, you know we talked about the gap opportunity, right? Could we fill the gap? And boy, did we. I think we came pretty darn close to doing so. At least the high of the day prior to our gap was 28,842. Our low yesterday, 28,875. So technically we missed it by about 30 points, but ultimately, where did we currently find support? Within the gap zone? And that, you all know, that's exactly why I like to draw those in with either, as some of our other coaches will mention, fat magic markers, right? We try not to make those lines too fine. We want to make them broad. But I like to use the rectangle as the reminder that we will frequently get near-term or intra-period weakness like that then gets bought up. And that's what we've done so far. Let's see if we can actually, get above the 50-day moving average with tomorrow's price action. But you did, if nothing else, get a close today above yesterday's high. And yesterday, to this point, at least over the last 8 sessions, yesterday was the low in this pullback. So we could potentially be looking at a hold move in the NASDAQ 100. And then lastly, we've got our Russell 2000, held the 50-day here. If I just went with the 50, that sure does look like a horizontal test of support, doesn't it? Again, that gap zone coincident with the 50 period and has managed to hold as yields retreated a bit today in the 10-year. Notice we got pushed back from resistance once more. The Russell got a little bit of a bullish move. Today, if we can continue to push yields down, then the Russell can continue perhaps to rally. So that's what we'll be looking for as we head to tomorrow morning's Trader Talk. For those of you who are unaware, that's the first class of our day on Mondays, Wednesdays, Thursdays, and Fridays. We kick that off at the opening bell, so 9:30 a.m. Eastern tomorrow morning. Now, let us take a look at our example portfolio and the trades that have gone off in the last 7 sessions. So a few of these we're not looking at. These IREN positions are from a different scenario, so we're going to kick those out. What we are going to talk about, we put on a position in JNJ, which we will look at. It's still holding. We are going to look at PACCAR. We put on a trade in that one a couple of weeks back. We got stopped out on it, so we'll look at that one. We also sold some on a small stop on Zebra, and we got taken out at a target on Dollar Tree. So let's go ahead and look at those, everybody. Let's start with our Dollar Tree trade. For those of you who have been in the class for a while, as I clear out the drawing details here, I'll push us back to the daily chart, and then I'm going to put up our trades and orders. So I've got orders shown. We don't have any existing orders, but this is what we did here, everybody. We actually nailed it, at least in terms of getting out at our target zone here. We were able to be buyers and set a bracket. We bought in back here, and we used a stop that was below our lows by the amount of the average true range, and we set a target up there at 135, and we hit it finally yesterday, and we got taken out at 135. So that one worked out great for us, about a 25-point profitable trade. Did take maybe a little longer than expected, but remember, technicals and price movement, this doesn't happen in our time frame. It happens in the market's time frame. Ultimately, we got what we were hoping for, which was a rally into 135. And then you look at what happened immediately following that. Now, this does not mean bearishness necessarily, but if you were thinking about targeting 135, 136 yesterday and you didn't sell, you might have been questioning that today as you pull back to 132 before seeing buyers step in intra-period. But this is still bullish on DLTR. It's just that it worked out the way that we had hoped, and we got taken out at our target, and that's exactly what we're trying to do as we move through our trades here. Sometimes we'll be able to and look to stick with entirety of the trades, but I want you all to remember, we are taking slightly different approaches on each one of these individual positions to remind you all of the various ways you can consider trading. Not everybody would be a seller of an entire position at resistance. Some traders would have looked at this and said, great, that's 25 points. I'll take a third of it off, take that profit, and see if we can keep running. And there's nothing wrong with that also. All right, so there's our Dollar Tree trade. Go back in here. Let's look at the Zebra. ZBRA, we are in here. We've participated since before. A huge gap move to the upside. We bought 20 shares back here, 263. Now we have sold shares at two different instances. We sold 5 as we made the breakout. We sold 10 on a stop order. That was this arrow here at 357.63, and we broke the 10-day moving average, and that's what led to our stop out on that one. Now we've got our I'm going to put up the 20 period because we remain above it, and we have our current stop for just 5 additional shares. Sorry about that. We're not making an adjustment just yet. We have our current stop for 5 shares. That's our remaining position in profit here. That is 1 ATR below the gap low. Okay. Now let me remind you, for those of you who may be new, what we work with ATR. This is average true range. All this is doing is calculating the the low to the high on the last 14 trading sessions. Okay, so we're trying to capture the current real volatility that the stock is witnessing. And this way we're taking into account, in our case, that gap move, right? We're taking into account the volatility that has been present since the most recent earnings. And by building our exit strategy and incorporating the ATR, it gives us an opportunity to stick with these positions a little bit longer, meaning we're forcing prices to be truly in what I would suggest to be a breakdown mode when we sell. So by trading under the low of our highest low in here, right under this level, by the amount of the ATR, it increases the likelihood that if stopped out, it's because the new trend is not what we wanted it to be. It's now bearish thereafter, and we don't want to participate. So that's why we've selected what we have. Now, it's also notable that some of you would use this as your opportunity to step into the same concept, but instead use the ATR at the 20-day. So the ATR right now, the 20-day rather, is 353.80, and some might look to increase the stop from where we are to the calculation below 353.80. So let's do that real quick here, everybody. If we take 353.8, and then the amount of our ATR at the close today is 1128. So we'll reduce that 353.80 minus 1128, and that gives us 342.52. Now, what does that mean? If we wanted to raise our stop, currently we're at 313.58. We could raise and elevate our stop about 30 points higher if we wish to do so. All right. We don't have to. We're not going to at this time, just because I'm going to go with some consistency on this trade and we're in profit. So even if we get stopped out on the remaining 5, I'm not worried about it because we did an exceptional job up here, everybody. We sold 3/4 of our trade for almost $100 of profit. I'm very pleased with that. And so now we can allow a little bit of volatility here. Should we expect the gap to hold? We should. If this is as bullish as it appears, then the gap should maintain. And further, the 20-day should maintain. But what I want to do is give it as much opportunity to do that. And if I raise my stop, that's going to tighten up that window and put us at risk for getting stopped out. I'd love to stick with this for as long as possible. So that's why we're going to keep it where it is. But if you are working with your own planning and your own process, understand there's a lot of different ways to go about this, but know what it is you're looking to get out of the trade, right? If you've not sold any up here, well, then your process could very well lead you to want to raise that stop and tighten up your exit strategy a little bit. That would make sense. Given our scenario, we're going to let it ride. Okay, So there's where we are on the Zebra trade. So Dollar Tree, Zebra. Let's look quickly at PCAR and then we'll move to the positions that stick in our portfolio. Yeah, so on this one, I'm going to go ahead and just put up the 50-day. So I think what happened here, everybody, we were building this over the 20-day moving average, and we just did not do an adequate job. Last week, I called out that we've been using the 20-day or horizontal support in a lot of these instances to provide our exit strategy. Well, this one just didn't hold the 20. What we're learning is that in this moment, at least, the market has been a bit more volatile and unlikely to maintain those shorter moving averages, particularly when we get past that 12-week window. And this is maybe a little anecdotal in nature, but let me just point this out. I'm going to put up just the 20 here, and let me hide those orders, or rather those trades. And I just wanted to point this out. So here we grabbed the 20 period back in November of last year, and we basically held it without any confirmation of a breakdown until about here. So that was 64 bars. 64 bars is about 13 weeks, right? 60 would be 12, 65 would be 13. So right in that window, 60 bars. And then we have this one here where we get above it here until about here. This one was only 50. Now, the only reason I'm bringing this up is that this is a common window of runs relative to that speedier moving average. The 20 period, not the fastest, of course. Some traders like a 10-day, some like a 5-day, but the 20 commonly will fall between 8 and 12 weeks. When we get into weeks beyond 12, the likelihood is that we are going to see some violation of the 20-day moving average. And so what I think we might be learning a little bit in terms of management is to give consideration to whether we're running well against the 20-day and how long are we running well against the 20-day. So for future trades, let's keep that in mind as we consider our exit strategies. Are we 4 weeks in to working against the 20-day, or are we 8 or 10 or 12 weeks in? Maybe we need to be willing to give it a little more wiggle, in which case we might fall back to a 50-day rather than a 20-day. So try and keep me honest here, everybody, as we work through our new trades. That's something I do want to consider. So here we worked with that 20-day. It led to us getting stopped out. Unfortunate situation, but we know it. It's part of the game. So what about Johnson & Johnson? Well, let's go ahead and I'm going to close up the scratch pad here. Let's launch a watch list. We'll make sure to link this with our There we go. Link this up, and this watch list is just going to be our current account positions. We've got a couple from some trades that don't apply to this class, those being Cisco and Valero, I believe. Let me just double check. Let's see. Yeah, we've got ONEOK, J&J, Zebra, and Rupp. And we've already talked about Zebra. So let's talk about Johnson & Johnson here. So I'll click on that one. Let's take a look at the chart. All right, putting up the major moving averages once more. We've got an uptrend working. We have a fully bracketed trade here, everybody, buying 25 at 273.73. The reason being we were maybe front running a little bit of a breakout, right? Some of you were waiting and wondered last time we talked about this, should we allow the breakout to occur? Absolutely can. Again, my job here, I want to show you all the various ways you can consider to trade. Doesn't mean every time we're going to lean into the same thing. I want to give options. I want you all to see the many ways you can do this. We went ahead and bought with the belief that the 50-day was going to continue to offer us support. We've been above the 50 since back here in June. Now remember, the 50 and the 20 are two very different windows of time, right? 4 weeks versus 10, pretty significant. So we can maintain a 50-day moving average far longer than a 20 in theory, right? Because that longer term time frame, you can hold that for a much bigger window. Look back, I mean, goodness, we're going back to August of last year. We didn't deviate under the 50-day for any meaningful window for more than 7 months. So that's the kind of thing I'm talking about with the 50-day. So We got a nice break to the upside. We don't need to make any changes here. Could we make changes? Sure. If we wanted to do that, and again, I'm just trying to give this time. So if we were to make changes today, the math, everybody, would be 256.17 less our ATR, $5.35. And that'll put you down to around 521 approximate, or 221, pardon me. Currently, our stop is in at 247. So what we did here, did we work this against the 20? We must have. Let's see. Yeah, 247 from the 20 period back when we put on the trade. So the 20 period has continued to climb. So if we want to make an adjustment here, we can, but I think once more, we're going to stay the course in the short run here. See here, did I do that? I think I did that math entirely wrong, everybody. I said 222. It really is 251 approximately. And so we would be raising our stop up by about 4 points or so approximately. That's certainly for many traders, plenty of reason to do it. But in our case, reminder, two things I want to make a reminder on. We're only in 25 shares. So the difference of 4 points is the difference of $100 net at the end, at the grand scheme of things, right? So I'm not terribly concerned about raising the stop up. And number two, I've got a bracket above me. I am trading this for the purpose of getting to my target based on the range that we're traded out of here. And so I want to give this every chance to get to that target. And if I raise my stop, I am reducing my risk, but I'm reducing my risk by only $100 in theory. So I'd like to get this as great an opportunity to get to my limit. It's my sell limit up here as possible. So we'll stick with it where we are. My sell limit, by the way, at 295. Okay, so there's J and J. Let us look at ONEOK. ONEOK, we've done a couple of trades on here in the past. I'll remind you, we're not making changes here because as much as we would like to work with an appropriate level, make note of the fact that we are really giving this one a longer berth because there's been a significant shift in the long range trend. Notice I changed this to just the 200-day moving average there in blue. The 200-day is down there at 83.87. And when we incorporate the average true range, we are trying to give ourselves an ample opportunity to stay with this trade. Now, this also is built on not so much the daily chart as it is the weekly chart. So here, what we're looking for is to maintain the new trend. Broken down trend, broke higher, consolidated, tried breaking out last week. It looked like we might have actually had a breakout, and then it just didn't stick. So what we're doing with this one is really trying diligently to stay with this position for as long as possible. And when you noticed, I put up the ATR down below, everyone. This one averages about $6 a week. And that's why we're working with it the way we are. We think we should hold the 50 period. So 82.12 is about $7 away from where our existing stop is right now. That should give us plenty of wiggle. This is slightly different in the sense that it is not currently showing you a very obvious series of higher highs and higher lows. This is more along the lines of a long range trend that has broken but confirmed shorter range support and has consolidated and given us the belief that for a number of key reasons, the movement in energy as a collective sector, along with this consolidation window, kind of offering us an opportunity of maybe a longer term time frame than what we usually would take in this particular class. So that's where we got the ONEOK trade. We'll not make an adjustment here just yet. Ultimately, if we can get above our resistance level and hold it instead of being thrown back like we have been so far, then we're going to feel like it's an opportunity maybe to start raising stop order. But at least for the short run, it's a brief throwback into the range. So let's make sure that we get this moving in the right direction once more, back up above the former resistance there at about 95, and then that'll give us something new to discuss. So that's what we're kind of waiting on here with One Oak. Okay, we did add the Roper position recently. It's not a company with which we have a lot of familiarity. This once more was built around a broken downtrend. And notice the wonderful action against the 20-day. Let's just put up only the 20 there, everybody. Look at how beautiful this has been since breaking out. We got ourselves in right here. And since we really haven't had a lot of risk, have we? We've tested horizontal very briefly right here, and then it was the 20 period, and we're right back off of it. So, we did, by the way, I got to speak to this. The sale of 90 shares goes back to my mistake of buying 100 shares originally. So this was me correcting the mistake. We are now in our proper position for the size of our portfolio. And for those of you wondering, the scratch pad will give you the details of our class. This is what we work from. The idea being, we got started with a portfolio balance of about $100,000. We want to position size properly, which is to say no more than $10,000 devoted to any one position and no more calculated risk than $1,000 on any one trade. We'll explore that as we build out an example trade here momentarily. So Roper, we are currently in with a stop that is below the 20 period. Let's actually go put up all three of those again. I think we are using the 200-day for our management of the stop order here. And the stop order at 277.26, let's just do the math on that. 277.26 at the 200-day with an ATR currently that is just shy of $10 would mean 267.26, and we are in at, or excuse me, 367.26. My apologies. So let's see. Yeah, all right. So 377 down to 367, basically, right? And we are in at 365. So we could raise that a few bucks, $2 approximately, but again, we don't have to, okay? And sometimes it's just as simple as saying, what are we looking at? What's the difference? If I made this different, if I raise the stop up by $2 and I get stopped out, well, then I've saved myself $20 on this trade. That's great. But ultimately, I want to be a seller at a much higher level, and I have to allow that pattern or that trend to play out. I should be positive about the way that this pattern looks, right? We broke the 200. We've held the 200. We've busted and held the 20 for an extended period. In fact, outside of this breakdown here on the earnings, we actually have been above it since July 23. So maybe let's take this into account. What are we looking at here? We're at 24 bars. So we're just shy of 5 weeks. If what we talked about earlier about that anecdotal calculation about how long we might run a 20-day, well, maybe we're only about halfway down the path of the 20-day moving average providing support for us. That could be the case. We could also say that we've basically been above it since way back here, in which case we may be around 45, and that might mean just a couple, 2, 3, 4 weeks more. But hey, at this point, we are in profit. We can simply allow ourselves the opportunity to allow time to work in our favor. So we'll give it a little bit more time there on ROP. Okay, so that's our example portfolio. Not making a whole lot of adjustments today, are we? I do want to remind you as it relates to the stop order, and we'll talk about this when I place a new example trade here coming up. Just remember, when we get these prices, when we set these levels with our stops, this is a trigger price. It does not guarantee a price of any kind on execution. So in this example, if the stock dropped to 365.71 and triggered, we'd have a market order to sell, and that means no guarantee of price in any way. In fact, we have risk for gap moves that take us from closing above our stop to opening below our stop, and that gives us risk of execution well away from what our trigger price would be on this trade. So you always got to be aware that the stop order is by no means a perfect order, unfortunately. There are risks involved. Okay, so now everybody, let us take a look at a couple of groups. I wanted to get your opinion on this, though. You know, one area of the market that's been moving is materials. And, you know, this is kind of interesting, tied perhaps to what we've witnessed in the way of the US dollar breaking down a little bit. We've seen some of these material stocks moving higher. And look at this. If I drew this line through, what it looks like is you had a bit of a breakout here that ran to approximately a zone of resistance initially before getting pushed back. And now we're back and trading at highs. So I thought materials could work. I also thought that technology could work. And of course, technology, if nothing else, this is going to be maybe hinging on what we get out of NVIDIA this week. So if we talked about a trade here, we could do that. But what do you guys think? Maybe one trade from each, one tech trade and then one materials trade. I think that makes some sense. The one that I'm a little disappointed about, when I was doing my pre-work, Lyondell, LYB, did not make the list at the close today, and I'll show you why. It's a materials stock, but look at what happened. So it closed below the 20-period moving average. Now, I could tell a bullish story about this, but you know what? It doesn't fit our process of buying stocks that are trending higher in leading industry groups just yet, because it didn't close above all three of the moving averages. It closed on it. I still think it's a trade we can work with. I was thinking we could be buyers, you know, at any point and work with the 200 period moving average. Take a look at this on the longer trend, everybody. This is kind of notable, right? We've had a huge range developed. Now it's red this week as we pull back a little bit, but the stock's made good moves here. And you know what? Even if we just rallied back into resistance, coincident with these last highs, or maybe the 200-week moving average, there's a potential opportunity here if we manage it properly. If we thought that we could get in the neighborhood of 62, well, an upside could take you to, say, 78. That would be about a $16 upside from the risk reward standpoint, where we're targeting about $1 of risk to maybe make 3. If we're willing to make or looking to make 15, we could risk about 5 and be comfortable legitimately, right? So $5 of risk, let me just see where that coincides on the daily. So interesting. I mean, the 50 and 200 are right on top of each other here, everybody. So, you know, this could be our starting calculation for our stop order. 59.66 is the 200-day. That's the lowest of the moving averages. So yeah, let's do this as an example. Let's just work through this one real quickly here, okay? So if we are risking $5 a share, approximately, let's do the math on the ATR below the 200 first. So 59.66 is our starting spot. And the ATR on this, according to our math, which we don't even have to do, is $2.15. All right. So $2.15 beneath that is 57.51. All right. So I'm going to write that down. 57.51. Anything under 57.51 for our stop order. And then we look at 62.55. You know, we're probably wise to give this a little bit of a padded limit, which would be up from our close as an example. So maybe we say 63. And so if we said 63, that means we're risking $5.49 a share. Okay. Now, next step, how many shares? What's the maximum number of shares I can own if I'm willing to risk approximately $1,000? So we take that $1,000 1,000 divided by 5.49 tells me 182 shares. Okay. Now, Beth, I see what you're saying. Put a pin in that for a second. I'm going to speak to it. 182 shares would be at, let's do the math on that. 182 at 63 would be a little more than we're comfortable with. And you know what? Around 100 shares would be fine. So while we could definitely take on more than 100 shares, we're going to go with a round lot here, just 100. And I want to speak to your comment here, Beth. Understand what we're talking about. Yes, testing the 20-day. All right. Two things I wanted to point out. One, buying in the midst of a red pullback is the kind of thing that's hard to do. Certainly hard for me. I struggle with this myself. For whatever reason, my brain says, that chart with a breakout that is more likely to pull back. That's the one my brain says, that's a good looking chart. You can give it the week, let it do its thing. You're going to give it some time. What I've learned about myself is that when I buy up here on these breakouts, what it ends up doing is testing my willingness to stick with the position. And so by being a buyer after seeing the stock pull back, by the way, it's pulled back $7. 69.20 was our high, is that right? 69.13 3 days ago, and 68.99. So here we are, about 8% down, 9.5% down. This is when we want to start looking. Okay. Now I understand not being enthused. So maybe the trader, instead of my math and saying 100 shares, says, okay, I'm less enthused. I'm only going to buy 25 shares. Cool. Buy those 25 and see what happens. Very limited risk in such a situation, right? The other concept here is we're going to put our stop 1 ATR below the 200 period here, right? Some of you would say, I'm going to put it beneath the lowest low we've seen. And really the question is, do you want to be in it if it can't hold the confluence of the 50 and the 200 here? Now, for our example, we're going to say no. But that doesn't mean I'm right. It just means that's the way we're going to approach this trade. So again, my thought is I should be showing as many ways as possible to consider entrance for any of these individual groups and stocks. And in a group that has recently broken higher and could be providing some semblance of leadership going forward, this is an interesting area of the market. There's a lot of other stocks in here. I mean, can we buy Freeport? I mean, sure, it's bullish, it's great, it's at highs. But once more, I think I'm a little more comfortable waiting on this one to come back for a test and then buying something like Lyondell where it's already pulling back from its recent high, right? So that's the conversation that I'm leaning into right here. That's all. All right. And of course, I know you all know I'm not giving you a definitive one way or the other. These are merely examples. That's why we're talking about them. So we're going to go ahead and step in doing 100 shares for entrance tomorrow under 63. We'll put our stop 1 ATR below our 200 period at 57.51 or approximately that. Given that we've seen the opportunity, we've got some horizontal resistance up above us. Let me add a little time. Let me see. Maybe we target that line up there for our approach here. So we'll kick this up one extra year. There we go. All right. Yeah, I mean, that was the last high back here. So we could totally target 78. That would be fantastic. And again, that fits our risk reward, right? I think that's what we want to speak to. Risk versus reward, opportunity, willingness to target upper levels. So we're going to build this as a one cancels other bracket. So I'll right click, buy custom with OCO. All right, close that down. We are going to stick with our 100 shares. Our limit is going to be 63 or better. Remember, every time you set a limit for the next day, in this case, it's only good for tomorrow. It's this price or better. So as long as it's under 63 at any time tomorrow, we're going to go ahead and be a buyer. Now, thereafter, we're going to set our exits to good till canceled, not good till canceled and extended, but just good till canceled. So regular session orders here. Good till canceled on the upside, 78 a share. So that'd be about a $15 profit if we filled both at their limit levels. And again, our exit on the stop, good till canceled, is going to be 57. And I said the math on it is 57.51, but we're going to come even a few pennies underneath that. So remember, try and work with odd figures, not fives, not zeros, etc. We're going to go in at 57.47, good till canceled. And just double check, buying 100. So about a 6,300 position that fits everything. And if we get executed on our stop side, yeah, we're going to lose a few hundred, but it's less than our comfort zone of $1,000. All right, so there you go, everybody. There's the first one. Leaning into materials. And then let's go ahead and take a look at some of these tech positions, everyone. One that I've been keeping a close eye on here was Arista Networks. Let's go back to my 1-year daily chart. Looks like they broke out of an ascending triangle recently. All right, a little bit of that action here. Notice the 50-day catching up. I think this kind of looks like that could be significant for us. Let's make that just the 50. See how anytime you look at your chart and you instantly look and say, man, that's a little messy. You know what I find is that when I say things like that, it's because the moving average is not providing support or resistance. And I want to lean into the ones that are. Here, it's been much more the 50-day. And granted, we've been below the 50, so it's been porous for us. So that means that if we're working with the 50, yeah, we definitely need some semblance of that ATR to help us out with the calculation. So the other reminder is while we are placing orders 1 ATR below our preferred moving average or support level, many traders do a mathematical calculation of the ATR. Sometimes it's 1.25 ATR or 1.5 or even 2 ATRs. It's all about your own process, your own time frame, your own tolerance for risk. But one thing we can state about Arista here is that we are closed today. Our close today at 190.94 is absolutely, as have the last 2 days, been above the high of our low day. This is our low day. The high was 187.28, and our close the last 2 days have been above that. So we've actually got 3 days in a row of closes above the high of our low day. Some traders would feel comfortable stepping in to something like this because ultimately what you've had is a broken ascending triangle, went to the upside, thrown back, and so far has held. So we can build a quickie here working against the 50-day and the ATR. The entrance would maybe be for a smaller position, of course, simply because the price per share, 100 shares is 19,000, 50 shares about 9,500, 25 shares about 4,750 ballpark. And I think for our purposes and expeditiousness, let's go with 25 shares. We'll do an entry under 192, which will give us a little bit of wiggle room. But I'm not worried about it because, again, you know what? And I'm always getting an or better price. On this one, we're going to let it run a little. So we're not going to set a stop, a target we're not going to set, but we are going to buy the reduced amount of 25 shares at a limit not to exceed 192 for tomorrow, and then a good till canceled stop thereafter. And here, let's go ahead and do the math real quick. 178.54. And then our ATR on this one is 791. And that brings us down to 170.63, which would be in the vicinity of our uptrend line, interestingly enough. So, 170.23 would be below this low here. So that's actually pretty good, all things considered. So let's go with that. 170.63. Bring this back. Okay. Make sure I did that properly. There we are, 170.63. So yes, we are risking, about 22 points. But if this thing keeps running for us, we could be just fine. But this, we're not targeting anything, even though we could see that, our last peak was up there at the highs, 214.89, about 215 a share. So if we got there, you'd still be looking at about a 1-to-1 risk versus reward. So the takeaway on this one, everybody, might be, yeah, we're going to place this trade. We're doing it for a much smaller share allotment than we might normally. But even if we give back and get out at the stop we set, you know what? We're going to still be losing only about $500 to $600 approximately, even though we can't guarantee that because, of course, no price is guaranteed on our stop orders. But here we are, buying 25 at a price under 192 for tomorrow. So as long as we're under 192 at any point tomorrow, we'll be a buyer. Once we are a buyer, we've got to stop at 170.63. No guarantee we get executed at that price, however. All right, let me go ahead and send that one off. And we are in. So there you go, everybody. There's a quick look at our example portfolio and setting the table for tomorrow with one new purchase in tech and one new attempted purchase in materials space. Hopefully that's helpful. I'm hopeful that the conversation, and first and foremost, I absolutely love it when I get questions that say, or comments even that say, like Beth and Jay both saying, yeah, this doesn't work for me. This isn't what I would normally do. I get it and I completely understand it. And I love that we can have that discourse back and forth. And your questions and your comments lead me to forced to explain why we're doing it this way. And I absolutely am happy to do that. And I hope the takeaway is, yeah, there's a lot of ways to go about this. We can massage our process to fit every single one of those instances we want to participate in. It just really comes down to how we choose to manage that trade. So hopefully we've generated a few different ideas with that in mind. So big thanks to Connie today. Thanks, Connie. Make sure you're following us both on X, Connie Hill CS, Kevin Horner CS. If this conversation was helpful, that thumbs up down below helps me out a bunch on the replay of this class when we get it reviewed and into the archive. But make sure you're subscribed to the channel and you're following Connie and me. We always appreciate hearing from you, everybody. Have a great rest of your Tuesday evening. I look forward to seeing you tomorrow morning for Trader Talk at Market Open, 7:30 a.m. Mountain, 9:30 a.m. Eastern. Have a great evening, everybody.